how many SoFi shares do you need to retire in the style that you've become accustomed to? That's what we're going to answer. We're going to go through the data, the model, and you will be able to do this for any stock out there, not just SoFi. I'm going to give you everything, the downloads and so on. So let's get cracking, shall we? Felix here, of course, this isn't financial advice, just a former banker sharing his, I think it's wisdom. I'll let you be the judge of whether it really is. What the heck's the 25x rule? This is also known as the 4% rule. And yes, you guessed it, it's the same thing. If you want to retire with a certain amount of money per month, then you need this much invested. So say you want to get $3,333.33, very important to count the cents, you need $1 million. Why? Because $1 million, so the $1 million divided by 25 is $40,000 per year, which is the 25 times rule. Okay, so basically whatever amount you want to have per year, you multiply it by 25x, and then you know how much cash you want. If you want 10K per month, 120,000, you need 3 million. Okay, we'll get into inflation in a moment, but this is the starting point. Now, I've listened to a lot of you, thousands of you, who've said to me, I'd like to make more money from my money, but I'm finding the market somewhat overwhelming. I find trading too complicated, options trading particularly too complicated. So I've listened. And on this Sunday, I'm going to unveil a program where we trade one stock, one strategy. We've backtested this over 8 years, 80% win ratio, and it's ideal for beginners and for people who are short of time. So come and join me on Sunday. I'll teach you the core strategy on Sunday for free, felixfriends.org/webinar. You just have to grab one of the seats and it's going to be a blast. It'll probably take about 90 minutes. So I know it's your Sunday. It's also my Sunday, but I think it's important and really the path to financial freedom potentially. Not promising you returns, but you get the idea. All right, then I've made a spreadsheet for you. There's a full spreadsheet here and I will share it with you. Where did it go? Spreadsheet's gone running. I will share it with you down below as a link so you can download it. We'll make it felixfriends.org/SoFi. And the point of this spreadsheet is to calculate what is a stock going to be worth down the road. And by down the road, we actually mean 10 years. So the first thing we need to figure out is, stock price, how many shares are there, and what revenue they've had. And I've done this already for you. So these are the first things to look up. And then you need to decide what is the price over sales multiple, which is basically what's the share price or what's the company value divided by revenue. And here it is. So this is the SoFi price over revenue. And right now we're here. Right now it's only 4x. At one point, we were at like 21x. This was the heights of the 2021 sort of speculative bubble. So we're going to take this 4x number here because I think it's a pretty conservative number as a base case. And it's always good to be, allow yourself a little bit more room for the upside. So we're therefore looking at this row here, 4 times price to sales. Remember that. Now, the next step is dilution. Why dilution? Why bring it up, Felix? It's boring, surely. Yes, sort of, but very important. Dilution comes when companies issue new shares. Why do they do that? Well, they do it because they need to raise money to build factories and that sort of thing. SoFi doesn't build factories. They've got no branches. They don't really need the money. So what are they doing? Well, they are handing out shares to employees. And that's still dilution because they're essentially printing shares. It's a little bit like what the Fed does, money printer, one of those. So how many shares will there be and how many shares are they creating? Now, there are people out there on social media saying, how do you expect shareholders to ever benefit when SoFi is diluting the stock 24% a year? Is that number correct? Should you follow Monkey Mo? Or is he a monkey? And I mean, great respect for monkeys. That's a good-looking monkey. But, well, if you look in the actual SEC filing of SoFi, there is actually a limit in there for how many shares they can coin a year, and it's 5%. So the absolute maximum they could do is 5%. So the 24% is just the guy's off as a rocker, right? Be careful, social media. Check the facts. In reality, though, the actual share-based compensation is around 3% per year in dilution. Okay, now we know that. Now, is share-based compensation a bad thing, full stop? Should you worry about dilution? Should you sell off all of your shares and go and find a video on how many shares of, I don't know, AT&T to retire? Well, actually, I don't think you could ever buy enough shares of AT&T. I think you'd never have enough money. This chap here says, again, master of coin. SoFi is a scam. Anthony Noto is making more money than Jamie Dimon, the JP Morgan CEO. Is that true? No. This is what it's about. So key management, including Monsieur Le Noto, have a enormous incentive because they have share options expiring in 2026. And if the stock price goes to, say, $25, Anthony makes $53 million. That goes to $35 before 2026. He makes $75 million. That goes to $45. He makes, actually, no, not just $75 million. It's this plus that. If it goes to $45, he makes a total $289 million. That wouldn't pay him more than JP Morgan. So it's share options that he's getting. Now, what are they worth if the share price is, say, $5? Slightly below where we are right now. He gets 1.65 million. You're saying, that's not bad, is it? Better than being slapped around the face by a dead, wet fish. But it's only 330,000 per year. And I'm sorry to say that is not a fortune. Decent amount of money, but not a fortune. So they have a huge incentive to get to a higher share price because he makes like $250 million. I mean, at that point, you no longer need to ever worry again, nor do your children or your children's children or anybody else that you, produce. Okay, then. So we now know that, right? We now know on our lovely chart here, and we will get to the real answer in a second. We know there's 3% dilution expected. Price to sale is 4%. And we know that the company's been growing at 45% or so per year. Do we know that? No, here it is. I've given it away. Oh, no. So this is revenue growth. And that is, if you take that over here, it's about 45% at the moment. It was higher at one point, but it gets harder and harder to grow at these rates. And bear in mind that throughout this entire period, they had their core business mutilated by the man who calls himself the president. Well, he is the president. I'm not sure if he remembers it on all days. Not a dig at Democrats, no, just making fun of somebody in office because he forgets where he is sometimes, doesn't he? Do I go left? Do I go right? Difficult decisions, those. So I don't understand why people elect people that old. I know there is experience, but I think there should be an age cutoff, probably. See, having said that, I know a chap who's 95, he's a billionaire, and he's really with it. So it's probably not the age. It's a question of, I don't know, how fit you are. All right, enough about that. You came here for SoFi. In 10 years, the SoFi share price will be what? Well, we know we've got a 4% at the moment price to sales. That could, of course, go up, but let's work base case. And at the moment, we've got 45% growth. Now, are we going to get 45% growth each and every year? I don't know. Probably not. Probably not. It'll probably go down a little bit. Let's just say it's 30% here. So at the base case would then be, we get a $77 share price. That's like a 10x, right? So if you go more bullish, and of course you could go really bullish to $2,000, but I'm not going to go there because it's not really the way my mind works. It's more like, let's go for something more conservative, and then upside's always a good thing. But let's just say they keep growing at 45% because they're just becoming one of the biggest banks out there. and then it goes to $231. Okay, let's just run with that number. So if the current share price is $8 for simplicity, and 231 is our aim in 10 years, then $231 divided by 8, that's a 20, let's call it a 20x, 8x return. So that is 28x. You got a multi-bagger, yay, finally, right? Maybe that's what we should call the video, 28x. We get more clicks. YouTube's a funny space. So how much would that make you per year? Well, and this is where some people will come and throttle me, because 28x over 10 years per year is 40% a year. Now, 40% a year is staggeringly, amazingly incredible. At 30% growth, you get 26% per year. Okay. Now, you could, of course, say, well, it could go really to the moon, it could be 76, but let's sort of stay in this kind of a range. Now, spit it out. How many shares do I need? Who wrote that? I blame the cat. So how many shares do you need? Well, how much money do you want? Say you want, for simple maths, say you want $1 million. So you want $1 million. And each share will be worth, did I write this out down below to make this easy on myself? Yeah, I did. Okay. So your goal, say your goal is $1 million. If you divide that by your stock growth multiple, oh no, there is maths involved here. Calculators will be harmed indeed. What do we need? Well, say we're going to get to this number here, $77 a share. Then let's ask our clever calculator. $1 million, $1 million divided by, what was it, 77? Well, you need 12,987 shares. So if you have 12,987 shares, and at the moment they're trading at $8, how much is that? $100,000 of SoFi. Now, you could, of course, say, well, okay, what if it goes to $231? Well, then you need $1 million squillion divided by 231. And what's that? Well, let's ask Microsoft, who provide this calculator. They tried to install a search bar today to get me to use Bing. It just pops up in the bottom of your operating system. The cheek of those bastards. 4,329 shares. And that times 8 is how much? That's $34,000. That's a lot easier to achieve, isn't it? So you need 32K. 32K, 34K. But is that everything? Is that everything you want to know? No, it's not, because actually we want to model this. How do we model this? Well, there is a lovely, incredible, amazing free website. And I'll put the link down below as well. I don't sell it. I don't get anything for it. Portfolio Visualizer. And we can model these things. So let's just say you have $10,000 right now. And you want to retire in 20 years. And we're going to do this pre-tax. I'm just going to assume you're doing this in an IRA or something like that. And we're going to change the expected return here from 8% to what? Well, we go back into our little cheat sheet and say, look, say it's going to make me 26% a year, right? Or maybe let's do 40. Let's make it fun. Say it's going to make me 40% a year. And I'm going to buy no shares whatsoever, ever again. And then actually, should we retire in 10 years? Let's retire in 10 years, okay? Then in 10 years, I'm going to retire. And I'm going to withdraw 4%. I'm going to sell 4% of my SoFi shares every single year until death do us part. I click on run the simulation. And then you get this loveliness. And what does it show you? Well, it shows you that in 10 years, you will have around $280,000 of SoFi shares. And if you sold 4% of that, you'd get $11,000 a year. It's probably not enough to live on unless you live very, very frugally. So we need more money, right? So say we put $50,000 into SoFi, it runs simulation, and now in 10 years, we are able to withdraw $55,000. That looks a little bit better, right? And then the amount of money we can live on goes up and up and up. We're basically becoming old, wealthy people, because in year 19, 9 years into our retirement, we can now spend $576,000 a year if SoFi were to grow at the same rate. Now, you can hit the inflation adjusted button, which makes this a little bit less fun. So without inflation, 1.4 million. With inflation, just under $1 million. And that's something to bear in mind, that inflation will be there. So when you set up these 25x goals, you probably want double the money, depending on when you're going to retire, at least double the money, maybe triple the money that you're spending right now, just because inflation is a bitch. There, I said it. So that's basically us modeling it and figuring it out. Now, word of caution, and this is a serious one. Don't rely on one company. Massive companies have gone out of business. Think of Enron and companies like that everybody said were the bee's knees, and fraud happens and they close down, or something terrible happens and they close down. So you do want to diversify. I can't say that often enough. So don't put your whole retirement egg on one stock, even if you think it's the best thing since sliced bread and butter and cheese and whatever it is that you like, fluffy kittens and golden retrievers and bunny rabbit ears, that kind of thing. But you don't want to rely on just one thing. That's really, really important, because it's your life, it's your freedom, it's what you actually work for. So that's a thing I would do. One way you could also potentially reduce your risk and improve your outcomes would be to set up an extra income stream. That's why I like trading. That's why I will teach you the core strategy of our one stock only trading plan, 80% win ratio, one stock, one strategy. It's going to be the simplest thing we've ever done. And come and join me on Sunday, felixfrenzelog.com/webinar. If you enjoy this video, and it gets a bit technical, doesn't it, sometimes with these things, then share it. Share it with someone you think could benefit from this. All the links are down below. You can play around with them. And I would, honestly, it's the best way to learn is to go through these things yourself and model these things yourself. And on that website, you can also put in multiple stocks. You can put in asset classes. You can put in the SPY or whatever it is that you are invested in as well, and then see what happens. And don't just be super, super bullish and optimistic. The reality is we never really know what is going to happen. So the way I like to do it is plan for the worst and expect the best. Right? That's generally the foundation in life. And then you're going to be good. You're going to be pleasantly surprised. I thank you for watching. I thank you for tuning in. Smash the subscribe button if you haven't already, and see you on the next one.